Hi everyone, welcome to Phillip Futures Weekly Market Watch. I'm Simon Teo, Currency Specialist at Phillip Futures. If you have been following the market closely, the past few weeks may have been a roller coaster ride for us, with the Greek build-out taking several turns before EU Minister finally approved the second 130 billion euros rescue package last week. The bad news is, one of the key terms of the build-out requires private sector investor to write off more than 100 billion euros of debt in exchange for a lower yield and longer maturity bond. Of course, the good news is that Greece will not default on its next bond repayment due on 20th March. With the Greece problem off the table for the time being, many of us will be asking what is next. In my opinion, the next market catalyst will still come from Europe. During the last few weeks, when the world's attention was focusing on Greece, Portugal's problem was quietly unraveling. Portugal received a 78 billion build-out last spring. Since then, its credit rating has been cut to junk, its recession has deepened, jobless rate has soared, and its bonds are trading at double-digit crisis level. In other words, Portugal is pretty much insolvent, as with the situation in Greece. Based on the current situation, it seems that there is no other way for Portugal to repay its debt without a second bailout from the EU nations. Nonetheless, European policymakers will try their very best to avoid a Greece-like restructuring for Portugal. Simply because, if Portugal were to seek selective default on its debt, just like Greece did, what would then stop the larger countries like Spain or Italy from following suit? If everyone starts heading towards selective default, we may see another round of layman-like selling off in global markets. This is exactly what the European leaders would want to prevent. But judging from the amount of debts to be serviced, they will struggle to do so. So how will this affect us? The likely indication is that Euro will be on a long-term downtrend and we can look to sell on a rally. My outlook for Euro in the longer term is bearish. So if you look at the weekly chart, you can see major resistance hovering around 1.3500 levels. These are the levels that we may see stronger selling pressure against the euro. From the chart, we can also see support to be around 1.2000 levels. If euro-dollar downtrend is to continue, we should see it testing 1.2 support in 3 months' time. Thank you for watching and stay tuned to our next weekly market watch.